Upper Echelon is brought to you by Deloitte for innovative thinking and thorough strategic planning. Turn to Deloitte. Well, our guest in the Upper Echelon this week, Mike Brown, the Chief Executive of the Nedbank Group. Mike, you were appointed in March 2009 to succeed Tom Boardman as Chief Executive in February 2010. Significant timing, given that confidence had been restored to markets, and it was pretty much as markets and the world had emerged from the financial crisis.
It was still pretty tough times back then in 2009, and I would guess many people are still debating whether the world is still in the financial crisis or the economic crisis that has followed on from that. But it was still a very tough time, and it still remains a difficult time to be in banking.
Very tough time back then, given the issues plaguing your parent, Old Mutual, as well. I mean, there were significant hurdles that they had to overcome at that time.
Yeah, so certainly at that stage, Old Mutual PLC was having some challenges, particularly with some of its businesses in the US. Old Mutual here in South Africa has always been a very strong business right through the cycle, and Old Mutual was looking essentially to raise money to settle some debt that they'd raised in London, and at one stage was looking to sell its stake in Nedbank. And that was really something that came onto my radar screen really in my first year as chief executive. For a number of reasons, the deal with HSBC didn't go through, but subsequent to that, Old Mutual PLC has both resolved the issues with its US business and sold its Nordic businesses for over £2 billion in cash, so our parent company is in good shape today.
Before the chief executive appointment, you were chief financial officer. That appointment from since 2004, so you're almost a decade into time on the executive at Nedbank.
That's right. I've been extremely fortunate to be executive director for nearly 10 years now. And prior to that, I was actually running our commercial industrial property businesses and was responsible for merging the businesses of BOE, NIB, Cape of Good Hope, and Nedbank. So I'd had a good 10 years prior to that in the front office of the business, either in property finance or prior to that structured finance and private equity, and then moved into the center as the finance director for 6 years. So by the time I was appointed CEO designate, I think I'd had the remarkable fortune of having spent a significant amount of time in both the front office and back office of the bank.
It's what tends to happen in banking in this country, in that executives emerge from kind of low levels in the bank, and you'll really find in most situations where leaders emerge from having spent 10, 20 years within the same bank.
I think that's right, and generally in any organization, not just a bank, I think if your organization is in good shape, it is always better to try and bring your people internally through to an executive level. That creates both stability in the organization, and it gives people lower down in the organization the ambition, because they can see that people from within can become chief executives. Often, clearly, if there are strategic challenges in an organization or an executive team has lost its way, that's perhaps when it's more sensible to bring in an external party.
Mike, you mentioned BOE there, Bank of England. You pretty much joined Nedbank through that whole transaction with BOE. Before that, you were at NBS, the Old Natal Building Society. With BOE, given that Tom Boardman was chief executive there, you had the fortune, I guess, of working under Tom twice.
That's right. It's an interesting acronym, BOE. Lots of people say Bank of England like you. It was actually the Board of Executives. But I was extremely fortunate to work for Tom, both when he was running BOE and I was running the property businesses there. Then when I first came into Nedbank, Tom was on the retail side. So I actually worked for both Derek Miller and then Graham Dempster. And then when Tom became chief executive, I became the finance director and worked for him again.
Having worked under Tom, is there anything that stands out, the single biggest thing that perhaps Tom taught you in your career?
I think without doubt the single biggest thing that Tom taught me, and his largest contribution to Nedbank when people look back on it, will be his focus on the importance of culture and values in an organization as the foundation for building a vision-led, values-driven business. And the whole culture and values journey that we've been on for the last 10 years at Nedbank is a tribute to Tom.
Mike, before NBS, before BOE, there was Deloitte. Before that, you'd obviously just qualified as a chief chartered accountant in 1990. Went abroad to work in the US and England, and prior to that, you were educated in KZN, like many people. That education in KZN, Maritzburg College, University of Natal. What was that like?
Certainly, I look back on both my schooling and university in Natal enormously fondly. Um, I thoroughly enjoyed both of those institutions, and in fact made many of the best friends of my life when I was either at school or university, who are still my friends now. So a remarkably fortunate, I believe, foundation to be able to move off from.
Strong traditions in both those institutions as well.
Yeah, certainly, and Maritzburg College is celebrating its 150th year anniversary this year, so it does have very strong traditions, and it's also a tough school to grow up in, because you learn, I think, the life lessons pretty quickly in a big boys' school of over 1,000 kids.
Mike, you were born in Harare in Zimbabwe. Looking at the country now, do you think you can't help but think that there's just so much potential still locked in Zimbabwe, despite some of the challenges it's had over the past decade?
Certainly. My parents both grew up here in South Africa, and my father was a banker, my grandfather was a banker, my great-grandfather was a banker. So my father got transferred to Harare, and I was born while he was working there. And certainly Zimbabwe has an enormous wealth of resources, both in terms of its people, with some of the best schooling available anywhere in Africa, in Zimbabwe, and in terms of its mineral endowments and its agricultural potential. So it is clearly a country that has enormous potential, that's been through a very difficult political period, and certainly we hope that the forthcoming elections now will finally produce political stability and enough political will to be able to grow the economy again, and for Zimbabwe to take its rightful place as one of South Africa's largest trading partners.
Mike, you spoke about the values and the culture that Tom instilled within Nedbank. Looking at the caliber of leaders that Nedbank manages to produce, I think of people like Rob Shooter, like Pinky Moholi, who were working under Tom, like yourself, working under Tom and his dream team. Your exco now, very, very strong leadership. What about Nedbank do you think helps produce this quality of leader?
So I'm sure, focus on culture and values is all about a focus on humility, a focus on self-awareness, understanding who you are as an individual and how you influence others. And, we spend a lot of time going through that as an organization, going through that as individuals and as a leadership team. And I think it's that foundation of emotional awareness that has been enormously beneficial both to our people, and they've used that to their benefit in careers outside of the bank, but also to our executive team.
Leadership in banking in the country in general. We've seen, obviously, the FirstRand founders all retiring. We've seen leadership transitions at Standard Bank most recently, at Nedbank, at ABSA. What's your take on leadership in banking? It's now the next generation who's really stepping up to the plate.
I think our country is very fortunate that we've got, apart from myself, because I won't talk about that, but certainly if I look across at the leaders in banking in South Africa, we have a very strong cohort of leaders, people who understand both their own businesses, but above that, understand the importance of our industry and the importance of our industry contributing to the country. So I think we're extremely fortunate with the leadership set we currently have.
Jacko Marie retiring last week after 13 years as chief executive of Standard Bank. You've obviously worked with him and know him very well. What do you make of his retirement?
So certainly Jacko was an icon in our industry, 13 years as chief executive, more than 30 years working in Standard Bank, so the sort of elder statesman, so you could say, of CEOs in South Africa. All I know about his retirement is what I've read, but I think, essentially what he said was, there does come a time in anybody's journey as chief executive where one looks underneath you and knows that unless you move on, people underneath you will be stunted in their growth prospects, and I'm sure that Ben and Sim will do a great job.
Looking at the industry, the banking industry in South Africa, what would you say is the single biggest challenge facing banking in South Africa right now?
I'm certain that the biggest challenge facing us is really the external macroeconomic environment. The best description I've ever heard of a bank is it is a macroeconomic hedge fund, and that's really our lending and deposits business and fees and services business, which is our transactional businesses and our flow businesses. So if you look at that sort of macroeconomic hedge fund, it is very tightly correlated over time to macroeconomic growth. And in South Africa, certainly macroeconomic growth, as we all know right now, is sluggish, 2.5% at best, we think, during 2013. And a big influence on that is the challenges in the external environment. Europe, America, and China all have varying degrees of fiscal or growth challenges, which will impact back on South Africa and our ability to grow our businesses.
Those macroeconomic challenges, given that they're facing the whole industry, is that the biggest challenge facing Nedbank as well?
Certainly. So I would think that would be our major challenge. If you then drop down and say, what are the specifics in the industry here in South Africa, I would point to the historic growth that we've seen in the unsecured lending environment and how that actually plays out now that I think it's clear that most players are slowing their growth rates. And are we able as an industry to engineer a slowdown in growth that presents a soft landing in that environment as opposed to a hard landing?
Brian Joffe, the Chief Executive of Bidvest, fairly outspoken a couple of weeks ago at their results presentation and on the front page of Business Day the following morning, said that business is harder than it should be in South Africa. Is that a statement you would agree with?
I think business around the world right now is just hard. So if you think about it on a relative basis, our industry, I think, has been blessed in South Africa, because if we look at who we deal with from a regulatory perspective, working with the South African Reserve Bank, working with the National Treasury, the fantastic history of bank regulation that we've seen here that gets South Africa to be ranked today number 2 in the world in terms of soundness of banks. Certainly as bankers, we can only be very grateful for the environment that we've had to operate in.
Mike, what do you say to critics? And there are so many armchair critics in South Africa. We sit at home and we pick the Springbok rugby team, we pick the Proteas cricket team, we pick Bafana. What do you say to critics who say that bank fees in this country are too expensive?
So certainly that is a perception that's out there. I think the reality is that on a global basis, South African bank fees are actually not that expensive. And in many ways, South African banks are significantly more transparent than many of our global competitors in terms of bank fees. So if you bank with a South African bank, you'll know exactly what your charges are. They'll appear on your statement, and we can have all of these comparisons. Many overseas banks rely on the free float. So what that means is when a deposit goes into your bank account, you don't earn interest on it for several days, and they use that as effectively a disguised fee, and they have significantly higher penalty fees. So, I think in the round, if you look at South African bank fees and say they're too expensive, perhaps if you stood back and you certainly looked at our retail business, it only produces a return on equity of around 13%. I think some of our competitors are probably a touch under 20%. So certainly retail banking in South Africa right now is not leading to usurious profits being made for shareholders at the expense of customers. And if you benchmark South African bank charges to other emerging markets, in fact, they benchmark very well.
Mike, the opportunity for financial services groups and banks is really in Africa. We saw your parent Old Mutual earmarking a significant amount of capital for investment in sub-Saharan Africa. We've obviously seen Absa and Barclays, Standard Bank, FirstRand kind of tiptoeing your own joint venture with EcoBank. A lot of companies, though, have rushed out into the rest of the continent and perhaps burnt themselves, rushed out too quickly. Has that influenced your decision to go about the Africa strategy in the way that you have?
Certainly. I think, in executing any strategy, any business has to take account of its own internal resources, which will influence how fast or slowly you can execute a strategy, as well as the potential to earn returns. And right now, if you look at the rest of Africa, the returns on equity in banking in the rest of Africa are generally still quite low. So any strategy in the rest of Africa from a shareholder perspective represents a short-term dilution in returns for the potential of greater returns in the long term. So the debate is really how much short-term dilution or short-term pain do you take for this potential of longer-term gain. And certainly, I think many people make the mistake of looking at the rest of Africa and thinking of it as a homogeneous environment, whereas it's in fact more than 50 very separate, very different countries. So from a Nedbank perspective, in response to both of those aspects, we have chosen in Central and West Africa to have a partnership approach, and our chosen partner is ETI or EcoBank. And in the SADC environments or East Africa is where we would want to build the Nedbank brand and the Nedbank franchise.
Mike, how do you get away from it all? What's life outside the office like?
So I'm extremely fortunate. I have a fantastic family and 3 relatively young kids. They're getting older and older. So I spend the majority of my free time with my wife and family. Over and above that, I enjoy my golf. I don't play anywhere near enough, but I thoroughly enjoy playing golf. I mostly now play with my son, who's 12, and I love getting to the bush or the beach.
What keeps you awake at night?
So right now, I think the thing that would be keeping me awake mostly would be the overall macroeconomic environment and reflecting on the challenges that could have back on our banking system. So, for example, you would have seen today the current account deficit still running at around about 6.5%, the rand weakening off the back of that. And the very big risk, I believe, for us is if the rating agencies take a negative view of those deficits and the fiscal deficit being slightly larger in the short term, but coming back to just over 3% over the longer term, and we get more sovereign rating downgrades, there's a very tight link between sovereign downgrades and bank downgrades, given the link between the sovereign and the banking system, and 2 more rating downgrades for South Africa, and we would fall below investment grade. So if that happened, and I don't think it will, but it is a possibility, if that happened, I think we would see a very strong sell-off in bonds, where foreigners own a significant portion of our bonds, and that would lead to a rapid depreciation in the rand and an interest rate spike off the back of that. And in the current highly indebted consumer environment, I think that an interest rate spike from a sort of currency-induced crisis would be very, very negative for the consumer and consumer bad debts. So that would certainly be the thing that worries me the most.
It's been fascinating to research and read about your progression in your career through banking. What motivates you? What's motivated you?
You know, I was remarkably lucky, I think, to end up in banking. When I joined Deloitte, I was fortunate to be put into an audit grouping that audited, amongst other things, banks. And as I started auditing banks, I realized that intellectually that was the business that I enjoyed most. So I guess right now what motivates me is I still thoroughly enjoy what I do every day. I've been remarkably fortunate to end up in this role. But not only do I enjoy what I do every day and the challenge of taking Nedbank to build Africa's most admired bank, which is our vision, but above and beyond that, I thoroughly enjoy the people that I work with every day at Nedbank, and I think that's what keeps me motivated.
Final question, Mike. I get a lot of tweets, I get emails, we get SMSs here at MoneyWeb from young people who are really just asking for advice. What advice would you give to young people out there, young graduates who might be reading MoneyWeb, who might listen to this on the radio?
So, you know, it depends what type of advice you're looking for. But I guess if I looked back and said, you know, what was the best advice I got, or how did that help me? I think the first piece of advice is there really are no shortcuts. There is no escaping hard work. And at the end of the day, when you start work, if you get up a little bit earlier than everybody else and you work a little bit harder and you work a little bit longer over time and you put a score on the board, you will be noticed. And the second piece of advice would be that in any corporate environment, it's not just your IQ that's going to get you to the top of a business. You have to have enough people skills, or let's call it EQ. So it's that balance between IQ and EQ that will determine your long-term success.
Mike, it's been a pleasure. Mike Brown, the Chief Executive of the Nedbank Group, and Upper Echelon was brought to you by Deloitte. For innovative thinking and thorough strategic planning, turn to Deloitte.